would an 8-figure pay package entice you to change companies? That's one of the things that's happening at the top echelon of banking, where recruiters are showing that or indicating that the old bump to switch firms is doubled, and they're seeing more and more 8-figure pay packages to try and attract really the best bankers that there are out there. And the motivation for this episode, of course, is an article that came out in Bloomberg that really is a really fascinating look behind the scenes of JP Morgan and Wells Fargo, just as two linchpin banking organizations. But it also kind of explores how complex it is to get organizational structure correct such that you can actually build a great talent brand and not rely so heavily on pay packages to entice people over. I mean, we know, of course, as a culture, as a stereotype, that banking is one of those industries that is very, very high compensation. But in exchange for that, it's very high stress, very long hours. And so the article, of course, talks about how banks are being kind of forced or enticed to offer these massive pay packages to grab the best talent. But it actually also explores some of the intricacies when you think about organizational structure. And so we'll walk through a couple of those coming up here. So thinking about pay, there are so many forces that are forced upon an org chart. You've got the internal forces, of course, with people trying to move up in their career, make more money. You've got between the functions or verticals within an organization, you've got people trying to move across. You've also got external forces that are that encroach on the organization. When you think about recruiters trying to take employees and talent away from the organization, so if you think of an org chart as a boat, you really got all the kind of forces on this boat trying to topple it over and make it not work. And one of the ways, of course, that you can steady the ship in any industry, but banking is one that really does this at the top end, is pay everybody way above market, and that way you can hopefully entice people to stay or entice people to come to your organization. Now, the last 18 months has been so disruptive of that model. You've had bankers who've had to maybe work at home, and this is one of the trends that the article talks about, where the last 18 months has forced a lot of workers to work from home, work longer hours while balancing their home responsibilities, maybe looking after their children or looking after their home. And because of the uncertainty, of course, that surrounds or has surrounded the pandemic for the last 18 months, managers and executives have tempered bonuses, year-end bonuses or payouts. And so you're getting this friction in banking, according to the article, where workers are expecting big payoffs at the end of the year, but they're probably going to get a little bit disappointed because of the tempered expectations of management. So there's kind of a big friction that banks are hoping that big pay packages is going to solve, but that's not necessarily the case. Another interesting facet of banking, and this ties very strongly into compensation, is you look at the upper echelon. So it brings up Jamie Dimon, who's the head of JP Morgan. And it talks about how a lot of the C-suite and the executives at the bank have recently received massive, multi-million-dollar pay packages or to try and keep them on board, to try and elongate tenure, right? That steadies the ship, and tenure is always a good thing, or majority of the time it's a good thing for an organization. But another friction that's placed on the organization, or another pressure, is that because tenure is so good at the top of the organization, and it's not just the C-suite, you can probably bring that down a little bit to where you're looking at executives and their directors and below that. Because tenure is so strong there and compensation is so strong, you limit upward mobility in an organization. We're talking about banks here that are 250, 260,000 employee bases, and so the idea that these organizations have the flexibility or the luxury of a smaller organization where you can build out new functions and get employees to build out different areas of the organization such that they can grow, even if you haven't got the org chart to support it right now. That's not necessarily the case with banks that are publicly traded and have corporate governance structures that require banks to do their work a certain way. And so excellent tenure at the top of the organization limits upward mobility for a lot of those individuals. And so that's triggering an exodus as well, because, as with most industries, the last 18 months has shown people that, or it has changed the way that people think about what work means to them. And so if they're not happy at their current role or their current position at the bank, they're going to switch banks to see if they can motivate some sort of upward mobility. So you've got that kind of tenure and org chart pressure that's going on there too. And so when you think about the banking, it's one of those industries that's very attractive, I think, to most young individuals, because and it's a certain kind of individual that goes into bank, because you are trading high comp with a lot of stress and a lot of man hours. But this great article in Bloomberg, and I recommend that if you're listening to this, to go try and find it on Bloomberg Wealth. It's titled "Wall Street is Offering 8-Figure Pay Packages to Woo Top Talent." It really shows how employer brands and talent organizations are much more complex than how much people are being paid, because we're seeing that even 8-figure pay packages aren't enough to get the best individuals to come to an organization or stay, as a function of all these other external pressures that we talked about, upward mobility and lifestyle and things like that. So it's such a fascinating time to be in the employer brand or the HR space, because we're seeing all these frictions, all these changes happen in real time, and organizations are having to adjust to them. Even the industries or the organizations that we thought of as most attractive traditionally are struggling as well. We can even parallel this over to how Tesla, traditionally is of course one of the most attractive companies to work for because of certain, factors like industry and vision and things like that. But with Rivian's IPO and the EV market heating up the way it is, a lot of those top talented engineers are switching over to different brands, because maybe they see, similar to banking, there's an upward mobility aspect to it, or lifestyle, or whatever it is. So organizations really have to think at the macro level about what their value proposition is to the market, because there's so many things at play, and that's what makes employer brand such an interesting space. It's also what makes it challenging for most organizations to get right. But yes, definitely try and find this article if you're interested, because it really does explore some of those you'd call them intangibles that affect how an organization is run, and things that people sometimes don't think about when it comes to talent, in terms of the external factors that go on around compensation. So if you enjoyed this video, please consider subscribing or hitting the like button, just so that you can get these updates as they come out.